Hello and welcome to what is the sixth video in our investor education series. Today, we explore ETFs that invest in utilities, which is considered to be a safe sector, relatively speaking, to invest in, especially during challenging times when the stock market appears to be making new 52-week lows. Dividend ETFs, as we usually do, let's start with the basics. What exactly are utilities, and why is it considered important to invest in them? Utilities are the basic services your home or business needs to keep it comfortable and functioning properly. Electricity, or as we commonly refer to it in Canada, hydro. These could be supplied by traditional generation means such as coal or from renewable resources such as solar or wind power. Natural gas could be used for powering your home's heating or for running a factory's machines. Water and sewage, of course, a key utility again. Waste management includes trash collection and recycling. Sometimes it also has many secondary aspects as well, when the collected garbage is reused in some other way, such as for composting or recycled plastic or metal. Communications includes TV, phone, internet, home security, etc. Almost unimaginable for many of us to live our lives without it. Our cell phones with internet connectivity are almost like an extension of ourselves. Pipelines, which are used to supply other utilities as well as stuff like oil. So, what makes these utility companies attractive from an investment perspective? Utilities typically are heavily regulated as they are supposed to provide a public service. Many utilities started off as publicly owned but gradually have either been partially privatized to generate funds for the government or private players have been allowed to compete in the interest of enhanced competition. When was the last time you changed your hydro provider or moved from one company providing water to your house to another? Doesn't usually happen, does it? This is because, due to the very nature of the service that utilities provide, they tend to have a captive customer base. What this implies is that sales and revenue will typically remain stable. Another feature of utilities is that they are not very flashy or have a lot of innovation going on, but they are very stable and have very slow but steady growth. This shows up in their low beta, meaning low volatility in share price, which means there isn't a lot of high capital gains. So, why do investors still gravitate towards these companies? It is primarily because investors are rewarded by stable and consistent dividend income instead. When putting together a well rounded portfolio, investors add utilities in their portfolios in combination with fast growing companies to smoothen out their risks. Also, when we experience turbulent economic times, investors like to load up on these companies along with other sectors perceived to be safe, such as healthcare and consumer staples. I will be covering them in my next videos. Now that we've seen what utilities are and what role they play in an investment portfolio, which utility do you choose? How many utilities across which regions or geographies are better? Instead of researching all the available utility companies around the world, the easy option is to look for ETFs which hold shares of these companies. Look for ETFs which hold utilities but are also well diversified by utility type and region. Here, I have listed the utility ETFs listed on the Canadian TSX or the Toronto Stock Exchange. As always, sorted by the AUM or assets under management. I have highlighted the ones which are the best in each characteristic. Management expense ratio or MER, which is the cost that you pay to the fund manager for running the ETF for you, or dividend yield, which is the payout to you as the shareholder, and of course the inception date, indicating how long the ETFs have been in existence. Again, no recommendations here. This is just a list of available ETFs. Take a look, do your research, and make your choice. To help you do your research, I have provided details for each of the ETFs from the previous slide. This here are the details of the more popular ones. The BMO Equal Weight Utilities Index ETF which has the ticker symbol ZUT. As you can see, it has 24 Canadian only holdings which are held in equal weightage. Take a detailed look at its performance over the past 3 to 5 years. This one is the BMO Covered Call Utilities ETF, ticker symbol ZWU. It holds the distinction of being the ETF with the largest AUM. Covered call implying that the fund manager indulged in a bit of options trading with the holdings to help juice up the returns, thereby being in a position to pay out a relatively higher dividend yield. Again, take a detailed look at its performance. The next one to look at is the iShares S&P TSX Capped Utilities Index ETF, which trades under the ticker symbol XUT. It is similar to ZWU as only also holds only Canadian utilities. XUT is also the oldest utility ETF, having been in existence since April 2011. The final one to check out is the Horizons Canadian Utility Services High Dividend Index ETF, ticker HUTL. This ETF holds utility companies from all over the world and also writes covered calls on the holdings. Now, this is an important slide. It highlights the performance of these utility ETFs compared to the XIC ETF, which represents the Canadian TSX Composite Index in red. As you can see, ZUT and XUT have outperformed, but ZWU and HUTL, the two covered call utility ETFs, have underperformed. You might counter that by saying that the covered call option strategy is actually netting you more dividends per month than the other two. So I've added the next slide to show this. If you want to make a note of this chart or take a screenshot, please feel free to pause the video here and indulge yourself. This slide has all these ETFs again, but showing the performance from a total return perspective. That is, not just capital gains accruing from an appreciation in share price, but also with their dividends reinvested. As you can see, ZUT and XUT steal the show again. Take your screenshot for your reference if you'd like. Well, that was a short and sweet video. I made it in response to requests I received from viewers who wanted to highlight some investment options during these turbulent times. And as I mentioned earlier, I will put together similar videos for other relatively safe and stable sector ETFs as well. Once again, I sincerely hope that you enjoyed sitting through this video as much as I enjoyed talking about it. I would appreciate it if you could show your support by please clicking on the like button and subscribing to the YouTube channel. I will continue doing these investor education videos, and if you would like to be notified when I release them, please click on the bell icon. I would love to hear from you. If you have any questions or feedback, please reach out to me. Cheers and happy investing!